Hey guys, welcome to this channel. It's your boy Sammy. In today's video, I'm going to be walking you down to understanding reversal chart patterns. Okay, we have a continuation chart pattern. I'm going to be showing you also in the next slide about the difference between continuation chart patterns and reversal chart patterns. Now, the difference is continuation chart pattern actually move with the trend. Let's say the market was bullish, the market decided to take a rest, or sellers were in charge but they decided to take a rest, after which they give us a continuation chart pattern telling us that we are back to being bearish. While reversal chart patterns is actually an indication that tells us the market was bearish, like the one you can see on my screen, and it's actually turned into being bullish. Now I'm going to be outlining you. Okay, I need you guys to stick with me to the end of this video. If this is your first time of watching this video, I would like you to subscribe, like, and hit the comment section below. Okay, that's the only way of supporting us here in this YouTube live. Okay, let's jump right in. Now, a quick one. If you really want to understand how these indicators actually work, all these indicators about continuation chart pattern and reversal chart pattern and continuation chart pattern, I would like you to always go to your lower time frame. Okay, you trade off of the higher time frame, but if you really want to spot them out, the first way I was able to learn them is looking at them in the 1 minute, not really trading them. As a beginner, I wouldn't say you should go back to 1 minute to start trading. Okay, until you're able to become skillful enough to trade, except you're a scalper. Okay, but if you really want to understand, just to go there and watch and see how this thing happen, you can easily see it with the 1 minute time frame. Reason is because 1 minute, it take 1 minute for each of the candles to be formed, so you can easily learn faster looking at it in the 1 minute time frame. Okay, rather than wait for the 4 hours to be formed. It's going to be taking you more time. Okay, just for the purpose of observation, not actually trading. Okay, please understand the difference. You're just going to watch in the 1 minute, while in the 4 hours you're going to trade off of the 4 hours. Okay, all the time frames are the same. Okay, let me quickly just outline that it happens in all the time frames. Okay, just the matter of difference on how many hours or how many minutes it take for each of the candles to be printed. Okay, let's dive right in. So as you can see here, this market was bearish. Here, this was swing point. These are the swing points where the market was touching the trend lines. Okay, now until we had the break. Now there are two things that I like to outline when it comes to understanding when the market want to reverse from bearish to bullish. I'll say three things that I would like to outline. Okay, now the first one is the candle momentum. Now what do I mean by candle momentum? When a candle is being formed like this, if you look closely, you see these bearish candles are actually big. Take for example, and a candle opens here and it actually comes down here. Let's use a bearish candle and or a bullish candle. Let's use a bullish candle, and the next one that was printed is this. So the momentum of this candle and this one are not the same, because why? This one is larger than this. Okay, momentum actually talks about the volume. Now if you look about this big one and you see the small one, they are not the same. Now let's look at the bearish scenario. If you look on my screen, you will notice that the momentum of this candle is big, this is big, this is small, this is small, this started getting smaller. Now when the market wants to reverse from bearish to bullish, it actually creates um, small candle momentums, which indicates that price was actually bearish. Okay, now the sellers are losing that momentum, so the market might likely reverse from bearish to bullish. So that's the first signal that I like to look. You can check it up on your chart. Okay, the next second one that I like to point out is this. The two work hand in hand, though. The two that I'm going to align work hand in hand. Now the second one is this. The market actually breaks through. Okay, it breaks through the trend line. After the drop down, it went up, break through the trend line. Second, the third one is actually break through the order block, the last order block. Now guys, there's something called break of structure. Okay, let me outline this out. There's something called break of structure. Let's say for example we have been bearish. Okay, each of these points are swing points. So if market should break any of this up and reverses back down, this is the first indicator to us that market has turned from bearish to what, bullish. We should, it might not reverse immediately, okay, you should be prepared for a reversal. Now what's the reversal? That's where the reversal of the indicator that tells us that the market has turned from bearish to actually what, being bullish. What happened here was an indication that the market has turned from what, bearish to bullish. Now the mistake I used to make as a beginner is, after price does something like this, and I wouldn't wait for it to come back to another block, I just jump in here and begin to buy up, and I get stopped out and I'll be like, the market is hunting me. No, the market is not hunting me. What happened was that everything that happened, or everything that I perceived actually happened, was real, but just that I was not patient enough. Okay, this is what I was saying. I was not patient enough. I had to zoom this out so see it clearly. So some guys call this for advanced guys, you call it chochi, which means change of character. Okay, or for this course, let me just call it the POS. Let's call this, okay, BOS. Now this is where I used to jump in, like I said, and that's wrong because you're going to be getting stopped out. So now, where is the right zone for me to get in? Sammy, where is the right zone for me to get in? I will tell you. There's something called indicator, okay, reversal indicator, and which is I'm going to be discussing this video. Here, right here, is the left side. This is the head, and this is the right side. The left, the head, and the right side. It has been formed completely. Now what I should be doing now is I wait for market to give me a reversal pattern after a break of structure. What did we see? Price came to this order block. This was where I kept my line waiting to see. This was the last order block. Order block is area where we expect the market to come to, pending orders are resting there. Some guys are buying here, okay, some persons have started buying from here, but I wouldn't advise you to do same except you were what, an advanced trader. So we are expecting price to come back to this order block here. And what did we see price do? It came to the order block. Now we can clearly buy. This was where I bought from, I think so. I think I entered pretty much late, so I say somebody somewhere here, okay. Now I'm going to be checking everything out and let's see if we are correct. Okay, I left my stop loss here. Why? I'll tell you. Because I gave market the free move here to do whatever I want to do, but it shouldn't take this last order block. If price should take this last order block, that means I was wrong. I'll get out of the trade. My trade will be closed. I already calculated my what, SL. Okay, so this is it, right? And this, what did we see happen here? Everything was what, cool. Everything was cool because why? This is the left side of the head. This is the head itself. Left side of shoulder, head, shoulder. So this is called shoulder, head, shoulder. SHS, shoulder, head, and shoulder. Okay, this tells us that we are good. How do we know that we are good? First of all, we had a trend line break. Momentum of candles were reduced. Second of all, trend line break. The third one is a break of structure, and the fourth one, price has actually come to where, an order block. The order block was the last order block that took price to the downside. So we are cool to get in what, into the trade. That way we don't have anything to bother ourselves. And where are we going to keep it in our stop loss? I've told you guys I'm going to keep it. This is where my SL was. This was a trade that I took. Okay, I'm not explaining something else. I'm teaching actually something that I traded. I'm teaching something actually that I traded. So my stop loss will be here. So I'm perfectly fine with it. So whatever happens, it's cool. I'll learn from it. Okay, this is actually gold. Okay, now let's check the continuation chart pattern. Now this was what happened in the market. It was not the same market. This is on this euro odd. Okay, so let's outline First of all, the momentum of the candles were small here. It's the left side of the head. This was the last order block. So there was a break of structure here. Price came back to this order block here. What did we see? Trend line break. So we got our entry here. Okay, let's outline this again so you guys can get it clearly. This is the left side of the head. Okay, whenever this left side is formed, you do not enter immediately, okay, because it's not clear. You can't take this. One of my students asked me a question and said, sir, is this the left side of the head? And no, this is too tiny enough for you to say this is a shoulder pattern. Okay, we have to give it space. The market knows what it is doing. It will definitely come to you. So this was it, the head, and the last one was formed here. So where do we get in? Simple. After I've seen something like this, my confidence is here. Why is my confidence here? I'll tell you. Because I have the left, I have the head. I'm waiting for the right to take this, and it comes to here. So what I used to do, if you notice my chart, most of the times I've been trading here also, doing a live video here also, you will see me do something like this. It's just a way of me waiting for the market to come to this order block. Now, talking about continuation or chart pattern. Now, after a market moves reversal, a lot of guys are going to be going to be missing out. Let's say you came late to the market and you saw that the market has already gone up. There is no need to panic, or there is no need for you to start getting worried or thinking on how to jump into a trade. No, that's where continuation chart pattern comes in. One of the reasons the market does continuation chart pattern is to identify with folks that miss the first entry. Okay, so whenever the continuation chart pattern is being formed, the market will actually give room for some guys to get in. If you miss the reversal chart, you can wait for the continuation. Okay, so you can see on my screen here that the market gave us what? A descending chart pattern. Okay, descending channel, telling us that the market is continuing. But some folks will be selling here. I created a video, I'm not going to be talking about this. I created a video where I talked about reversal chart pattern, continuation chart pattern rather. So I'm going to be leaving the link in the description below. Okay, I'm going to give you access to it so you can get the full course. Okay, if you want me to create videos like this about chart patterns, I would like you to leave a comment in the section below and just write chart pattern so we know our next video. Okay, thank you.